Hey everybody, Cowboy here. Today we take a look at the GBPJPY chart. It's a good chart to look at on a day when there's a lot of USD news because technically it's not part of the USD's orbit, not in a big way. At any rate, you can stick around after this quick clip to find out who we are, what we do, and how to find us, or you can look at the website at the bottom of this page or zap the QR code. In the meantime, enjoy the clip. If one did enter the breakout, then where their stop was would have determined how well they would have done because price actually came below, broke out once again. So the way, if you want to like swing trade this, then I would look at, we'll start with the fib targets. I just have, my fib tool is designed to also be an extension tool. So I just added the extension numbers into the fib tool. I've shown you all how to do that in the past. If anybody has any questions, let me know. And then we do want to also understand the volume aspect. So we'll use a fixed range for the prior high time frame, relevant, what do you call it? Impulse, thank you. And price is going to be attracted to here, right below the 1272. It could go up to the 618, but price will be attracted to the 1272. So I probably would prioritize that target. You have some gappage below the 618. I mean, there is volume right there. You could be a little risky. I would try to, if I was going to aim at the 618, what I probably would do is on the fixed range, you'll notice that this light blue line, that's the top of the value area. That's a value area high. So price doesn't want to go above that now that it's in that area based on this impulse. So I probably would take profit below that, below the 618. So, and then what I would do is I would set that target and then I would be ready to go ahead and just like raise a stop or, just call it a day. The entry would have been at the breakout here, but we're not in that scenario. So let's just say we get a pullback to the neckline, or at least some kind of pullback. Let's pretend it goes to the neckline for now. It might not go that low. My trade would look something like this. And then my stop loss would probably be below this pullback right here. So, whether it's a ATR stop, however you do your stops. With this, I'd probably do like an ATR. So it's probably gonna be something like this. I'll have a trade that looks like that. Oops, edit undo. One thing here is that there's a decent amount of price action right here to which price will be attracted, but right above that is going to be a blank area where price is not attracted. So I probably would have a stop that looks like that, a nice little 3-to-1. And then as price pulled back, I'd start raising stops, and so it all depends on how you do your trades. But I might look at something like this, and if price pulls back but it doesn't go all the way to the neckline, then you're looking at just a higher entry. That's that. And if you want to be a little more risky, then you could use this entry, and as it pivots up, you can raise your, let's pretend that is our entry. You can raise your stop to where this is your structure. You want to make sure it forms proper structure. You want to look at your algo to make sure that price does want to head up from there. You can have yourself a nice 4-to-1. And then as price breaks through this area at the 1272, just below that at the point of control on this fixed range, I might look to go ahead and put stops to entry or even use some structure-based stops. Or if you have some pullbacks on the way up, I put my stop, say, below that pullback. And this is all, just trade management. You all are very familiar with how I do trade management. If you're not, ask questions. But that's how I would do the beast. I'd look for a pullback, and then I'd enter, and then I would consider a stop loss before prior structure. Or if I was wanting to be risky, I would put a stop below whatever new structure was created by said pullback. Problem is, if you wait for that pullback to create structure, you're going to have a little bit higher of an entry as well. So it's, you could also split the difference where you enter half of your position with the original stop loss, and then you wait for the structure to be created, enter the second half of your position, put your stop below that newly created structure, and see how that goes. And that way you're kind of splitting the difference. And then once that new structure is created, you can always raise your stop to accommodate that. So there's just, a lot of ways to do that, a lot of ways to skin that cat. So we are live every weekday, 8:30 AM EST, giving out free content. Come check us out on YouTube. Come talk to us. Go over to the website. That's www.algofactory.tech. Again, www.algofactory.tech. And for a limited time promotional offer, we are giving out memberships at $49.99 a month. There's a ton that we're offering over there. Come see what that's about. Also, you can see our Twitter link. All the links are up on YouTube. Come talk to us on social media. See us on the live YouTube videos. We hope to see you soon.